Good day, everybody. So, Guy here, the unknown, and today I want us to look at something very important. I want us to look at beautiful trades that actually transpired this previous week, and I've selected these trades because there's a lot to learn from them. There's a lot to learn from them. I assure you, you're gonna get the best value from this video. So, take your pen and paper, and let's get into it. As you already know, this is the most explosive trading strategy for indices, and it works for Nasdaq, which is US 100. It works for the Dow, which is US 30, and it works for S&P, which is US 500. Okay, I know most of you are scared of indices, but this is a low risk kind of a trade, and it's a very easy. And guys, we have certain criteria. Okay, if you look at this criteria, I'm just gonna underline it with green, and the reason is because you can trade even though this one hasn't been met. Okay, you can trade even though this one hasn't been met. Why? Because some days you won't be able to identify it. However, from this one, you do not trade until it's met, and you can't come to this one unless the first one is met. Okay, I mean the second one is met. Okay, and you can't come to this one unless these two have been met. Okay, and you can't get to a point whereby you execute a trade unless these three are met. Okay, so this one is a pre-request of this one, and this one is a pre-request of this one. So you're only gonna come to your charts 5 to 10 minutes before the New York session starts, and that's when you're gonna start identifying trapped volume. Okay, and let me explain this on the charts. Okay, so guys, you only trade when you have the odds aligned on your side. Okay, you only trade when you have an opportunity, and this is highly important. Okay, I've seen most people trying to outsmart the market. Here we are not trying to do that. We can never outsmart the markets. We only execute when we have the odds stacked on our side. This is highly important. Okay, so this is just the previous day separator. Okay, and this one is the closing price of the previous day. I'm trying to explain this criteria. And guys, if you haven't subscribed, please hit the subscription button, because I'm not always gonna keep explaining the same things every day. Okay, there's a lot of things to learn. There's a lot to learn, like scaling in. When do you scale in? How do you scale in? There's a lot to learn. Okay, right now I want all of you to master this so that you become consistent, and then we will focus on how you grow. Okay, so guys, let's just say the previous day prices went okay, let's say prices went like this. They went up, and then at the end of the day they came and closed here. There's a free indicator in my description which will give you this dotted line, which is just the closing price of the previous day. And why do you need it? That's because to identify trap volume before the session, mostly prices will just come and do something like this. Let's just say they do something like this, and they do something like this, and this is where the session is about to open. This is roughly 10 to 5 minutes before the New York session opens, and that's when you come to your charts. Please be disciplined. Okay, because the more time you spend on your charts, the more you're gonna get tempted to take multiple trades, and usually that leads to multiple losses, and you don't want to like lose your capital, and by the time the elephant shows up you don't have any bullets. Okay, you must think like a hunter. Okay, you're going out to hunt. If you have 10 bullets, you're not gonna shoot birds. If you want or if you are hunting elephants, you must actually be patient until you see an elephant, because it won't make any difference even if you can hit 30 birds with those 10 bullets. Okay, when one elephant passes, you're just gonna regret. So guys, preserve your capital. Be disciplined enough to wait for the session to open if you are using the strategy. Okay, so let's say this is where the session opens. Okay, this is where the session opens. Okay, let me use something like this. Yes, this is where the session is opening. Okay, which is 9:30 a.m. US time. If you are in South Africa, this is 15:30 South African time. Okay, 15:30 South African time. Okay, this is highly important. Okay, so look at this. Let's say the session now opens. We don't take the first candle because mostly it's going to be a stop hunt, right? And now we have to identify trap volume before the session. And to identify trap volume before the session, it's so easy. You just draw a box like this. Okay, and mostly it's going to be above or below the closing price. That's why you need this indicator. Okay, so look at this. I'm just going to put this as red. I'm trying to explain this criteria. Okay, and why do we say these guys over here are trapped? Everybody who went up is trapped. So everybody above whose whose trade got executed above the closing price is trapped. Why? Because when the session is opening, they are at a minus, they are losing. Everybody who bought is losing at this point when prices are here, so we call them trapped. And there's a reason we do this. Okay, I will explain it. Let's say this one has been met, we know who is trapped. Everybody who went up is literally trapped. Okay, that's highly important. Okay, that is highly important. Now we're gonna go to the second criteria, which has just been met. Okay, because now the session has opened. Okay, and let's assume there is no news on the day. Okay, so this the session is open, this one has been met. What are we waiting for? We are waiting for a chart pattern. Okay, we are waiting for a chart pattern. Let's say prices now begin to do something like this. Okay, they do something like this. Okay, let's say now they give you a pattern. 90% of my trades are based on a triangle. Let's say they give you a pattern like this, which is in this case a beautiful triangle. Okay, and guys, there's something I'm gonna show you right in a minute. Okay, let's say now this one of a chart pattern has been met. Okay, it has been met. Okay, why? They have a chart, we have a chart pattern, however they haven't broken out. So what I do is I'll set an alert here and I'll set an alert here. Let's say in this case they break out with a big candle here. Okay, an evidence candle is the biggest candle that breaks out of the pattern. If you want watch my reset video, you'll understand this. Okay, so let's say now they've just broken out here. Okay, we have trap volume inside this box. So if you don't have 75 pips, let's just say 65 pips to 75 pips. Okay, if you don't have 65 to 75 pips from where the evidence candle closes to this point up here, you don't take a trade, because our minimum target is 50 pips. Okay, but if you look here, I said market conditions. I'm gonna show you how to target more, of which I did show you in my recent video, but I'm just repeating this so that it syncs well with you guys. I'm not always gonna keep repeating the same thing because there's still a lot of things to learn. Okay, so look at this. Most of the time what they'll do is they will just come, and then they can start building another pattern here. Like in this case, let's say here they build a head and shoulder. Okay, they build a head and shoulder. This is a head and shoulder if you look at this, and there's a reason I'm putting this here, because most of the time they will do that. Why? Because they spend the entire day sending people into the wrong direction. Okay, they send people into the wrong direction, which simply means everybody who bought is at a loss here. So if you don't have 65 to 75 pips, you don't execute that kind of a trade. Okay, you only execute it if you have 65 to 75 pips between this point where the evidence candle has been given to this point here, because most of the time they will just lead you up into trap volume and trap you. Let's say now again they give a breakout with a very huge candle. Okay, they give a breakout with a big candle here. So guys, this is the trade, and this is highly important. I know to some it might be confusing, but guys, it's very important in the case that we identify trap volume before the session. This is something most people don't want to follow. People just want to start with a chart pattern, but most of the time you are getting trapped because you did not try to identify trap volume before the session. Okay, you did not try to identify trap volume before the session. However, we are gonna remove this. Okay, this is the trade, provided this is the biggest candle that broke out of the pattern and it happens at the correct time. Okay, if you still remember, in my recent video I showed you the times. I did this, watch, I haven't deleted anything. You see, I keep repeating these things because they're important, but I'm not going to keep repeating them forever. When I say at the right time, I told you I'm waiting for a trade that happens from 10 to 10 past, 10 minutes before or 10 minutes after the o'clock mark, or a trade that happens at 20 past to to 22. Why? Because this is 10 minutes to 10 minutes, 10 minutes before and 10 minutes after. But I told you I have golden times. If the evidence candle is actually given 5 minutes before or 5 minutes after, within this times here, this is gonna be a very beautiful trade. Okay, sometimes yes, they can give a fake breakout. Remember, you're not always gonna win all the trades you take. This is highly important to know. But with a high win rate, you're gonna win most of them, and with a good risk reward, you're gonna be highly profitable. Okay, because sometimes people take beautiful trades, they lose, and they like, oh, this is so bad, I'm bad. No, if you're gonna be in this business, you must develop a strong heart. Okay, this is a business which is not for the faint hearted. It's not for those with small tempers. Okay, because most of the time you are gonna get good trades, but they can end up losing. Okay, that's why you don't decide to use 10 lot size now, and then in the following one you decide to use 50. Okay, you use a consistent lot size, knowing that any trade you take, you can lose it. Read Mark Douglas' book, Trading in the Zone. It will help you understand all these things. So these are the golden times. If it happens 5 minutes before or 5 minutes after the clock mark, or exactly at the clock mark, this is my favorite trades. Or if it happens from 25 to the 25 past to 25 to, these are my favorite trades because this is the golden times. Hence I've used the golden color here. However, I am still gonna take the ones that happen from 50 to 10 past, because this is the best time as well. So guys, if you watch my recent videos, that's where I explained all these things. Okay, so that's why that's why even here, where is my content? Okay, where is it? I think it's lost somehow. Okay, let me just revert back to it. Let me go back to it. Yes, here it is. Okay, that's why if you look at this point here, I said at the correct times. Okay, I'm not gonna take a trade that happens at quarter past unless it's so clean. The evidence candle stands out. But most of the time, I'll just allow it to pass. And you're gonna see these things when we go to the charts. Okay, so let's change the scenarios here because this is highly important as well. Okay, wait a minute. Okay, I want to reverse the scenarios here. Okay, I just did this one to show you what happens in case they break in the direction of trap volume. Okay, so if you don't have sufficient amounts of pips here, you can wait for them to break out and give another pattern or a continuation pattern. That's when you can take it. Why? Because we want to be sure that we are gonna get paid, and there is actually enough space for the number of pips we're looking for. However, if it breaks to the downside, this is breaking against trap volume. Here you can take it with no issues regarding trap volume before the session. So now I believe you understand why we look for trap volume. I believe you understand why we always try to identify trap volume. And guys, I know this might be confusing. Unfortunately, this is a business that you have to put in the work. Okay, if it's confusing, just watch the video again. Okay, it's gonna help you. So again, let's say all the criteria are met and this candle breaks out. Maybe let's just say if you are using US time, because most of the people here on the channel understands US time. Let's say it breaks out at 10:57. Okay, 10:57 is just 3 minutes to the hour. This is a perfect time. It falls within my golden times. Okay, so I take this one. Okay, I take this one. Why? Because all the criteria have been met. We have trap volume, and they gave a pattern against trap volume, which makes sense because most of the time they'll use the entire day to trap. So they have gathered a lot of money, and then for them to actually book profits is just punishing the people who have been trapped. Hence why I always say wait for the right time, because if you come early, you're gonna actually be tempted to actually buy when you see them going up, sell when you see them going down. Okay, so guys, we don't do that. We wait for all the odds to be stacked in our favor. Okay, so now they've given the breakout at 10:57. Perfect time, okay? Perfect time. Let's speed up because I don't want this video to become too long. So let's say this one has been given at the perfect time. You see, evidence candle at the correct time. The evidence candle is the biggest candle that breaks out of the pattern. And when I say the biggest pattern, I'm talking about the last leg. This is the last leg. So from here where it touched the line all the way to where it broke out, this is supposed to be the biggest candle, okay? Biggest candle, I'm not saying in terms of like it must be 30 pips. No, remember our maximum stops are 25 pips, our minimum are 15. We don't put a 10 pip stop. I know most of you want to have 10 pip stop losses because you think you're gonna win, but remember, they can still retest and they're gonna close you. But 25, you're gonna be very safe, and our minimum target is 50 pips, okay? And I'm still gonna show you how to actually target more. But again, if you go to my previous video, which I will link in the description, you're gonna see how you can target 100, 150 or 200 pips, okay? Because if you are risking 25 for 50, this is 1:2, and this is the minimum, this is the lowest we are willing to go, okay? But if you are risking 25 to make, let's say, 200, you can see that this is a very big risk reward, okay? It's a very big risk reward because it's roughly 1:8, okay? And this, guys, happens most of the time, okay? So if they break out here, depending on the size of the pattern, if the time it took to build this pattern is above 1 hour, you can target roughly 100 pips, okay? But if the move from maybe here to here, it's about 300 pips, you can still target above 100 pips. But let me not talk about that because it's all documented in my recent video. You can just go there and watch it, okay? Because I don't want this video to become way too long, okay? So please, you can go and watch my recent one, okay? It's very important. So you see how the criteria work. I have developed something very important here, okay? And we're gonna use this box with the knowledge we got from this from the explanations here to actually execute the trades that happened in the previous week, okay? And I'm gonna show you something very important. So guys, let's look at this. This was on the 24th, okay? This was on the 24th. If we look at the 24th, okay, let's see. Okay, who is trapped when the session is opening? I told you just a minute ago. The reason I underlined this one with green is because some days you won't be able to identify trap volume before the session. Okay, why? Because they will give you days like this. If you look at this day, where are we? This is where they made the high, this is where they made the low, and this is the closing price of the previous day. You can see they send people out down, again they send people up, and the session is opening where? In the middle. Remember, we are coming 10 to 5 minutes before the session begins to identify trap volume. So in this case, we are in the middle. Who is losing? I told you a minute ago that the reason we call this ones trapped, the ones who went up trapped, is because when the session is opening here, they are at a negative. Here's the negative. They are at a negative. However, if you look at this one here, we can't say who is at a negative because those who sold are at a negative, and those who bought somewhere here are also at a negative because we are in the middle. So in this case, we do not know who is literally trapped, okay? So therefore, we continue, okay? Remember, I told you we do continue, okay? Because this is underlined with green. You can continue without it, okay? We can continue without it, okay? Now we are going to criteria number 2. With criteria number 2, now it gets exciting because we need to know if we had news or not. And what was the day, guys? Let's see. What was the day? The day was actually the 24th, okay? The 24th. So since it's the 24th, we need to go to the economic calendar. Do we have news during the session? Yes, we have news here. This is at 4 p.m. It's just in South Africa it's 4 p.m. but in US it's 10 a.m. okay? So yes, we're gonna wait for 10 a.m. before we actually start looking for the pattern. Why? Because we cannot skip this step. We cannot come to the chart pattern unless this has been met. And on this day here, we have news. So what do? We wait for the news to actually play out. Okay, I believe this makes a lot of sense. Okay, so of course the session opened here. I'm on Nasdaq right now. Okay, the session opened right here, and what I usually do is this, guys, to just make things easier for everybody. I do it like this. This is S&P, this is okay, and then I'll just double click on the Dow. So what I do is actually something like this. I'm gonna literally drop this one like this, okay, like this, and then I'm gonna take one of them and I'm gonna actually pull it up like this. I want you to actually see how I do them, so that if you feel comfortable utilizing this approach, you can just use it as well. Okay, so this is what I do. Okay, so let's look. Okay, I think this one went a little bit deeper because I can't see the scale here. You see, now this is how I actually do it, and we are looking at S&P at the same time. Let's identify trap volume. They went all the way up. Okay, and the session is now opening where the session is opening. You see, with US30 on the 24th, it was different. Okay, they send people down, back to where? Back to the closing price. Just look at how they, wow, this is perfect. I love this. You see how they send people to the closing price. I told you most of the day they're gonna trap above or below the closing price. So everybody below the closing price is literally what? Trapped on the Dow. Okay, on the Dow. Okay, on the Dow, everybody below the closing price is trapped. And let's go to S&P 500. I know most of you don't like it. And on S&P 500, unfortunately, if you look here, the session is opening in the middle. By the way, it makes a lot of sense because S&P is gonna do mostly what Dow does, because it's built up of mostly the same kind of companies, right? So just the difference that S&P has 500 companies and Nasdaq has 100 companies, but mostly it's the same kind of companies. Okay, same category. Okay, so look at this, guys. You see, in this case here, we cannot identify trap volume, but on the Dow, we were able to identify trap volume. Everybody below the closing prices, trap Y, they send below, they come again, send, and the session is opening up here. Okay, the session is opening up here. This is brilliant. This is beautiful. However, we have news at 10, so we do not do anything up until the news have traded. So this is the candle for the news. Okay, sorry guys, this is the news candle. Okay, so we are not gonna do anything up until this one has actually traded. Okay, that one has actually traded. Okay, so again, if you look at the S&P, this is the news candle, if I'm not mistaken. Yes, it must be, because this is, yes, it's the biggest candle, by the way. And guys, I know most of you try to guess the news, but you don't know how the numbers are gonna come out. Okay, because these things are actually mostly surveys. Okay, the news are actually collected in the form of surveys. You can't know what people are going to respond on those surveys. You can't know what companies are going to respond on those surveys. Okay, so you don't know the numbers. And I know that most people will tell you, hey, you can guess news, but in reality you can't guess news. That's just a recipe for a disaster for me. But if you are comfortable with it, you understand it better, then I'm not here to credit other strategies. Okay, so we are looking at them at the same time like this. Okay, so now the session is opened. Okay, because now the news have traded. Okay, now we want to see a chart pattern, which is highly important. Okay, and now we're gonna go to, okay, all of them are actually trading at the same time. We are waiting for a chart pattern. Okay, let's see where we can get a chart pattern here. They go down, they come up, they go down, they come up, they go down. Okay, when it's happening like this, you can just draw lines to try to identify chart patterns. Okay, yes, of course, if you watch my recent videos, I talked about patterns where they don't reach the low. Just watch my recent video, it's in the description. Again, if you're not subscribed, please subscribe. Okay, look at this, guys. You see here, this is a beautiful pattern. Okay, and then Okay, we got a pattern on US30. Let's see here. Okay, on the Dow, what's happening? Okay, we can just draw a line from here. Okay, but this is not a pattern anyway. Okay, because even if you try to draw your pattern like this, again, it's not a pattern. Okay, it doesn't qualify as a pattern. Let's go to let's go to this one. Guys, as prices are trading, you are just trying to identify lines where they have multiple touches. I know some people are going to say, but this has traded. Guys, it's so easy. As they are trading, your job is to find where there are multiple touches, and that's all you do. Okay, it can't be difficult. You see, this is it is a triangle. Okay, it is a beautiful triangle though. Okay, now we have two triangles. Okay, we have two triangles. Nasdaq didn't give us anything, but we have two triangles. We have a triangle on the Dow, and we have a triangle on US30. Okay, so what is the next one? What is the next criteria? We got a pattern. Now we need an evidence candle at the correct time, but there's something now I'm gonna bring in, which is my tick box. I told you, send me an email, I'll send you this. Okay, and then here we have a pattern, we have a triangle. Okay, we have a triangle on what? On US30 and on US 500. Okay, I told you guys, as these things are playing out, okay, you are feeling this tick box, and as these things are playing out, you are actually doing what? You are actually looking at them at the same time and trying to see what's actually happening. Okay, this is highly important, and you take the easiest one on the day. I told you, don't get married to a certain pair, okay, or a certain asset. Okay, the most important thing is to take what has given you the setup. Okay, so now I can see the breakouts, guys. Wait a minute, I want us to look at something very important here. Okay, is the pattern perfect? In my recent video, I told you my pattern is perfect if it has at least 3 touches up and 3 touches down. That's what makes the pattern perfect. Okay, so okay, we are looking at these two pairs again. Let's go back to the charts. Do we have 3 touches? Okay, okay, let's just count them like this, or we can just use something like this. Okay, something like this. Okay, we have 1 touch here. Okay, that's where it began. Okay, so what I will do is I'll try to make this one a little bit bigger. Okay, we have 1 touch here. We have a touch down. It's a pin. Yes. Why did I take it here? Because we have multiple touches. This is the first touch, this is the second touch, and I explain touches like this. Okay, I explain touches like this. Okay, so this is another touch, 2 up, 2 down. My recent video, I told you, if it goes halfway, you use this you see, this is the first touch, okay, of the pattern. So you take the middle part. If it crosses the middle part, of which the middle part we can say it's here, if it crosses the middle part, they gave all the effort to come down. Yes, it's a pin, but I told you, these candles do not just become pins. Okay, they actually go down. They send people down. There are people who chase these candles because they were big. Okay, that's why I told you, you wait for the candle to close if they give you a breakout, because most of the time it will be a pin. Some people don't want to listen. They just want to take these trades because they feel like candles are running, candles are going down, hey, they're gonna miss and miss and miss. But most of the time, the candles that go quickly and they're so big, they might end up being a pin. Okay, so that's just something important. Okay, so let's see, do we have another touch? They came down. Yes, we have 3 touches. Did they come down again? Yes, we have 3 touches. So is this pattern perfect? Yes. Okay, fine. Let's go and look at the pattern above again. Okay, we have a touch. That's where it began. We have a touch down. Yes. Same scenario as I explained here. Yes. And they come from here. They go up again. You see, touch, touch. They went up again. Second touch. They came down again. Touch again. Okay, important. And now they came up again, 3 touches. This one, they came down again, another touch. Okay, and they went up again, another touch. Wow, this is beautiful. They came down, another touch, and then they went up again. I count this is a breakout, so but I count it as a touch because it touched. This is another touch. So this one had multiple touches, okay, multiple touches. Is this one a perfect one? Yes. Is this one a perfect one? Yes. Why? Because they both have 3 touches. So yes, in both scenarios, US30 and the Dow, they are perfect patterns. Okay, now what time, how long did it take to create the pattern, which is important in now deciding how many pips to target. This one took 72 minutes. This is above 1 hour, and I told you if the pattern takes above 1 hour to build up, you can target 100 pips. Okay, you can target 100 pips. Okay, you can target 100 pips. Okay, let's look at the one below. How long did it take to build the pattern from here to here? This is 43 minutes. This is less than an hour. Therefore, you are going to target less than 100 pips, which is 50 pips. Okay, however, there's another criteria. You can also look at the volatility of the day. This took 300 pips, so they are not just going to give you 50 pips. You can still target 100 pips. Why? Because of the volatility of the day. This is just another, because I have like I have 3 methods that I use for my targets. Okay, I have 3 methods that I use for my targets. I've got 3 methods that I use for my. I look at the volatility of the day. I look at the time it took to build the pattern, and again I look at the distance between the pattern. You see the distance is 100, above 100. So yes, you can target 100. The distance is above 100, 150. So you can still target above 150 because of the distance between the pattern. Because if you reach a Baka, again, what he says is like when you get a pattern, his targets are mostly just the distance between the patterns. Like he expect them to go the same distance. Okay, so if this is 150, you can still target 150. Yes, some days you're not gonna get that, but if you have something like a magic key, you can use that. Lock your profits, lock 50% of your profits as it hits 50, and then just leave the other one running. Okay, because some days you're not gonna get it. But again, even if you don't have a magic key, I will still target as I'm showing you here. Okay, because most of the days my targets will get hit. Some days they won't get hit, but that's something that happens some days. So guys, you will never always like it's gonna go 100. No, most of the days it will. It's about probabilities, what happens most of the time. That's why I say some people use this criteria. They take a trade, they lose, and they come complaining. Guys, it's not about that you're not going to win every trade you take. It's about probability. Okay, and I believe that's something you know. You can't be in trading if you don't know those things, because trading is all about probabilities, and you're not going to win every trade you take. Okay, that's highly, highly important. There's no strategy that is 100%. Okay, you just need a high win rate and a good risk reward ratio. So you see all these things, guys. You see all these things. Okay, you see all these things. Okay, now let's go back. Okay, now let's go back. And okay, one took less than 1 hour, and the other one took above 1 hour. Okay, so for the one that took, we can target 100, but again I showed you that even here you can target 100 when we use other methods. Okay, now the most important part is this one out of all this checkbox. Okay, now this is the evidence candle. I told you the evidence candle should be the big candle, and it should be a big candle. I love this. I just want to show you something. Okay, I spoke about it here. When I say this part here, it's supposed to be the biggest candle from the point where they touched up until where they broke out. Okay, that's what I said. Now let's come back. Okay, let's come back to the charts. This is the last leg. They touched here up to where they broke out. So this is the leg. When I say the evidence candle must be the biggest candle, I'm talking about this last leg here, because inside the pattern, yes, they're gonna be trapping. Therefore they will give you big candles, very big candles. Okay, but when they are going to break out, we use the last leg only. We don't use the size of this candle. No, we compare the breakout candle with the candles that actually made the last leg. Okay, so look at this here. Look at this here. This candle is the biggest candle. Okay, this candle is the biggest candle that broke out. Okay, it was roughly 28 pips, And even if you look here, this one is the biggest candle. You can just come and try to count the number of pairs, because sometimes people get confused. They'll say these candles are equal. These candles ain't equal. You see this one? Let's measure. Okay, let's measure. Okay, you see this one is 40, this one is roughly 34, this one is bigger. Okay, and this is the last leg where they touched and went up. Okay, please don't forget this. Okay, this candle must be bigger than these candles here. Okay, and we call it the evidence candle. So do we have an evidence candle? Yes. So when we come back here, all our criteria here have been met except the correct time. Now we want to see if it happened at the correct time. And then again, do we have an evidence candle? Yes, we have an evidence candle. What time was the evidence candle? Which is the most important thing now here. Okay, as you are still learning, I would advise you take trades that happen at the golden times, or take trades that happened at our acceptable times, which is 10 minutes before or 10 minutes after the clock mark, or 10 minutes before or 10 minutes after the half hour mark. Let's look at the time here. The time of this evidence candle was 46. Okay, which is not the perfect timing. The time of this evidence candle here again was 46. I told you I won't take it. I only take it if it's too perfect. This for me was too perfect. Okay, I took the US30, but let's not look about this. Let's not talk about the trade that I took here, because I don't want you settling for times that are out of our acceptable times or our golden times. Okay, I want you to focus on our perfect times. Okay, so let's say you didn't take this trade here. For me, I took it. Okay, because this was so perfect and the evidence candle was so perfect. But let's say you didn't take it, because today I'm talking about the golden times. Okay, I want you to focus on the correct trades until you have gained all the experience you need. And remember, guys, it's highly important for you to back test. That's why I always say go and back test in real time. And there's something I want to talk about when it comes to back testing. Guys, don't try to back test the whole month in one day. Okay, I told you back testing is important, but the most important part in back testing is back testing in real time. If it's 1 minute, speed up the charts up until the session starts or after the news, and then from there do it in real time, because sometimes you're not going to get the trade in the first hour. Okay, so it's going to take you time. It's going to take you roughly an hour, 2 hours, or you're going to get it in the third hour. So which means you're going to have to wait roughly 3 hours for the trade. And if you are not used to staying that much long in front of your screen, you won't be able to wait for the good one. You're always gonna try to force things. You see small things, you are taking them. You see small things, you are trying to force them. Okay, you will always like oh, this is a pattern, let's come to this one. You're always gonna say, oh yeah, this is an inverted triangle, I take it. No, guys, no. When you backtest in real time, you're gonna get to feel the need to be patient. You're gonna know at what times they mostly give you the trades. You're gonna see the patterns. Oh, this is a good pattern. Oh, this is not a good pattern. Like these patterns here that I'm showing you. Okay, these are made out of pins. They are not the best patterns. Like in terms of the patterns, like when we talk about patterns on Shabaka's book and stuff. Okay, but I've given you all the patterns in the playbook, which is in the description again. You see, these patterns you'll only understand if you have back tested them long enough. Okay, so I'm not gonna lie to you, hey, you're gonna be profitable just because the strategy is so easy. What no, you need to back test in real time. That's where you're gonna get the value. Let's say you didn't take this one because of the timings. Okay, I took this one because it was so perfect and so clean for me. But let's say you did not take this one. Okay, you did not take this one because it was out of your timing. Okay, which I advise at this stage when you are still starting. Again, guys, if you look at this, okay, if you look at this, guys, they are always gonna do this, and I'm gonna show you this again. Oh, I think I'm gonna jump most of the days and we're gonna go straight to Friday because I don't have enough time right now. Okay, this video is getting too long and I don't like long videos. You see, they give you a head and shoulder, a head and a shoulder, and they break out. Look at this, look at this, look at this. Okay, let's go back to, okay, we're gonna, okay, so for these ones, For these ones, maybe you didn't take it because the time here was 46, and which was roughly out of the timings, okay? Because you know, we need, this is the clock, this is half past, we need 10 minutes to 10 minutes before to 10 minutes after, and then 10 minutes before or 10 minutes after, but the golden times are 5 minutes before to 5 minutes after, 5 minutes before and 5 minutes after. Okay, let's say this one failed because it was out of the timings. Okay, so let's say you didn't take this one. Okay, sometimes yes, experience does help, guys. Honestly, I took it because I've been doing this for the longest time and I understand this one. So I want you to start by understanding. Don't try to jungle everything when you are starting because you don't yet have the experience. But as you go, that's when you're gonna gain the experience, gain the experience, gain the experience. Okay, because some of the time you're trying to jungle almost everything. Okay, let's say now we are talking about US30. The pattern is the head and shoulder, right? Head and shoulder, right? And is the pattern perfect? Obviously it's 3. Yes, I love my patterns with 3. 1, 2, 3, which is what makes the head and shoulder perfect, because it's 3. It sends you into one direction 3 times. This is, yes, it's a perfect head and shoulder. Okay, how long did it take to build the pattern? That's what we have to consider. It took actually 31 minutes. Okay, so the target is 50 pips because it took roughly 31 minutes. So the target is less than 100 pips in this case. Okay, do you have an evidence candle? Let's go back and see if we have an evidence candle. Okay, is this the biggest candle? Okay, this is obviously the last leg. You see, they pulled back and they broke out. So yes, this is the big candle. Okay, because it's, yes, it's the big candle compared to this one. Okay, so this is an evidence candle. Okay, yes, we have an evidence candle. Yes, somebody's gonna come and say, but this is not the biggest candle. Guys, you can just compare the sizes of these candles. Okay, the body is 10. Okay, you can compare these candles to see if it's the biggest candle. Okay, 10. This is, okay, the bodies, this is roughly 11, 12. Okay, so guys, this is indeed the biggest candle. Okay, it broke out. Okay, yes, now do we have an evidence candle? Okay, these are the same criteria as these one. Okay, do we have, what time did they break out of the pattern? Remember, now we are looking for the timings. This one broke out at 28. You see the times down here, it's 28. Okay, this is a golden time. This is a trade you don't want to miss. Look at the EMA, it's already inside. They've retested the EMA, it's already inside the EMA collapsing. Look at this one, it's already inside the EMA. Look at this one, it was already inside the EMA. So guys, the EMA is going to help you because we look for the ones that are inside the EMAs. Okay, inside the EMA. This one, if you took it here, where is your 50? This is 50 pips, but again, they retested and gave another big opportunity here, okay, for another entry. But these are the things we'll talk about when we talk about scaling in. Hence, I'm telling you subscribe, because I'm not always going to keep on repeating the same thing. So still you got 100 pips even though you targeted 50 pips. Why? Because of the opportunity they gave, retest or pull back, and then another big candle. This is a big candle compared to this one, and it now closes below this one here. So guys, you see, even if you follow the correct timing, again, you got the perfect trade. Okay, so it's about comparing. Sorry, for those who saw this pattern and took it, this is the first candle, we don't take it, and we still have news. But this is just not a pattern. Okay, this is not a pattern, guys. Okay, take patterns that make sense to you. Don't look for those smaller, no, take patterns that actually really send people into the wrong direction, because it's all about trapping. They trap, then they go into the opposite direction. So that's the most important thing. Okay, so let's quickly go to Friday, because I don't have sufficient time for this video. Okay, it's already way too long and I didn't want to be long. I'm not gonna talk about trap volume before the pattern. Okay, I'm just not gonna talk about that, because at this moment in time there are many that happen throughout the week. Okay, but just want us to quickly go to Friday. Okay, quickly go to Friday. Okay, because that's That's where again we always had better trades. Even if we go to the 26 again, we still had the best trades. Okay, I will go to the 26. Okay, okay, let's just go to the 26. Let's go to the 26 so that you don't come and say, hey, I'm skipping days, I'm skipping days, I'm skipping days. Because I know some of you will come and say, he's skipping days, he's skipping days, he's skipping days. Okay, okay, I'm not going to talk about who's trapped. I'm not going to talk about that for the sake of time, but I believe you already understood. Okay, because this is a day where you can't identify trap volume. Why? Because this day just went up. There was no trapping. Okay, there was no trapping, as you can see. It just went up. Okay, it just went up. So I told you some days you won't be able to identify that. Okay, let's just do something very quick. Okay, now let's say the session is opened. This is the 26th. We have to go to the economy calendar. 20. Okay, it's the 26th. Okay, it's fine. So I won't do Friday. Okay, I won't do Friday, but I was supposed to do Friday, but the time is hitting me. Okay, we had news at this was okay, this was when was this? Let's just repeat. We are looking at the 26th. Okay, 26 we had okay, 3:20. That's roughly 10 minutes before our session. We had fetch here. Okay, good. Those news I didn't see them. Okay, they were not broadcasted. Okay, so the session has opened. We have okay, the news have actually traded before the session. Okay, and they were not broadcasted. The only one I saw was just the 2 minutes where they were just talking about things here and there. Okay, things here and there. So at this moment, what we're gonna do is now the session is open, session open, session open. We want to try to see if okay, we did not see trap volume before the session. Yes, it's underlined in green, which is still okay. We wait for the session. We didn't have news during the session. Okay, so we wait for the session. Okay, this one was met. Now we want to see a chart pattern. Okay, I'm saying it's met because we don't trade until the session begins. So we are coming in during the session and we want to see a chart pattern. Let's look at what they do. The only thing that comes close to a chart pattern is this one. It came close to a chart pattern. Okay, it came close to a chart pattern. Okay, again, this is good. It's a chart pattern. Not came close. It is a chart pattern. This one was just this one honestly no. You see, let's see, where did they touch repeatedly? They touched, they touched, they touched, and now we want to see where they touched repeatedly. You can see this one is a channel. I never speak about channels. Now let's go to Nasdaq and try to see if we can identify a chart pattern. Where did they touch repeatedly? You can see they're touching. Okay, and where again did they touch repeatedly? Something like this, repeatedly. Okay, repeatedly. Okay, you see here they touched. So here they touched. Wait a minute. They touched. Sometimes you won't be able to get where you see. If we put it here now, we are breaking this one. And beside, it's up. You decide how you draw your patterns. This is a trade I took. That's why I'm showing you this. Okay, this is a trade I took. That's why I'm showing you these things. Okay, this is where. Yes, this is where. Okay, let's look now. This is a pattern and this is a pattern. Okay, do we have an evidence candle here? This is the last leg. Do you have a big candle here? No, we don't. Right? We don't. Yes, we get a very big candle, but already, if you are getting a big candle and it's already 50 pips, guys, from where the pattern has broken out, this is your target already. Okay, this was supposed to be the target, which clearly shows that already they have gone in that direction. So this trade is no longer a trade. Okay, and then I just want to be quite quick here. Okay, so I'm not gonna go through all these things, but as I said, this is an opportunity for you to come back to the charts and just compare this as I was showing you. Use the check mark and everything. Okay, because this will really help you. But let's look at what happened to the Nasdaq, because that's the one I took. This one, obviously, guys, this pattern is like an inverted triangle, okay, but we take the cleanest one, okay. We take the cleanest one. For me, I took this one, okay. I'm not saying this wasn't clean, but for me, I took this one because this is a wedge. You know wedges, okay. This was the most perfect wedge for me. Yes, did we have an evidence candle? Remember, we need a candle bigger than this one, and this is where we got that candle, okay. It was just from the breakout, it was still 20 something pips, so we can still take it, okay, 20 something pips. But again, my stops are 25 pips, which is here. So I took this trade over here, and my stops were 25 pips, which was somewhere here, 25 pips, okay, because this is an evidence candle. You see 25, yes, 25 pips somewhere here, yes. This is the trade I took. If you are looking at this one, guys, the evidence candle is already 50 pips, so it's not worth it. And this is S&P. S&P, you know, like it's explosive, and mostly the evidence candle is gonna be so big. You see 70 pips already, okay. So this is the one that I took here. Beautiful, okay. I took it here. Yes, they gave an opportunity for a scale in, but I didn't take it because I had already closed the charts at this point. Because I take my trades and I close my charts, give them some time to actually do play out, okay. And that's when I targeted 100 pips here, okay. Mostly because when you, okay, let's look at the time it took. The time it took was roughly less than, but again, the volatility of the day. Let me show you something. I told you I used the volatility of the day, okay. I used the volatility of the day. Let's see how many pips did this trade go before throughout the day. We want to see if there's a lot of volatility in the market or not. This trade went you see already it has gone 249. That shows that this is a high volatile day, okay. They move prices a lot during the Asian and the London session, which actually shows that there's a lot of volatility. So I took this one. It was a perfect one, okay. And let's look at the time of this candle is 28. So the previous day I took 20 at 28. Even this day I took at 28. This is my golden times. It falls within the 30 minutes before, the 5 minutes before and the 5 minutes after. And then my target was just 100, okay. Could have targeted more, but my target was just 100. I think it went 150 something pips. You see, that was my target, okay. This was my target. So guys, you can see when you use the criteria and the checkbox, it makes everything simple. Because guys, again, the time is what's gonna save you most of the days. The time is what's gonna save you most of the days. I know sometimes it sounds like it's hard, difficult stuff, but use the time to your advantage, okay. Use the time to your advantage. Again, I wanted to show you Friday, okay. I wanted to show you Friday. Okay, Friday. Where is Friday? I love Fridays. I love Fridays because usually Fridays just go in one direction. Fridays go in one direction. They give you an opportunity, they are usually gonna go in that direction. Okay guys, I just need 2 minutes to explain this, okay. I just need 2 minutes to explain this. You see, I'm not gonna talk about trap volume again. You can come to these days and identify everything as I showed you. You see, session opens, boom, let's look at the calendar. We need to 27. Do we have news during the session? That was before. Okay, good. Now let's go back, and you see they just go up, and they go up how many pips? They go up roughly 370 pips, and you feel like, oh, I missed the move. Guys, relax. I told you, be patient and relax. Always be patient and relax, okay. This is a trade they gave midweek, head and shoulder, same thing, same indices. They gave the head and shoulder midweek, okay. The problem is you are hunters, but you don't want to behave like hunters. Your job is to be patient and wait for what you are hunting for. You can't be shooting birds when you are looking for elephants, okay. What is an elephant? An elephant is your setup. You know what you are looking for, okay. You know what you are looking for, okay. Let's look at this one, head and shoulder. Where is the breakouts? You see, this is now the big candle. Okay, this is a big candle. You see, they are not that far. It's only 26 pip. Yes, they give this. Again, it's still acceptable. It's still acceptable. Why? Because the candle, the evidence candle is now given here. Evidence is like assurance that now they are leaving. Okay, it happens exactly at let's see, it happened exactly at 59. You see, the times are so perfect. So this whole week it was 58, 59, 58. You see, 3 beautiful days. I skipped some days. Still, again, if you go back and look at them, you still find the same thing. Okay, the time pattern. They gave you the beautiful time, and this is already inside the EMA. They bounce in the EMA. Now they give you this. This is the big candle. And how long did it take to build the pattern? It took 47 minutes. But let's look at the volatility of the day. The volatility, there is 370 something pips. This is a high volatile day, and it's a Friday. They're giving you a pattern. They usually go in one direction. Boom, you got 200 pips. Okay, volatility of the day. Volatility. Most of the time you can take it back to the low of the session. It's Friday, guys. It's Friday. Low of the session. Boom, hit. Okay, it's Friday. It's Friday. Friday, they go in one direction. You look at others, there was no beautiful pattern. Okay, your job is to just find areas where they touch repeatedly. Once you get that, that's where you're going to be able to come up with a pattern. They touch this area repeatedly. 1 touch, 2 touch, 3 touch, 1 up, 2 up. Head and shoulders are always like perfect patterns because they send you into the wrong direction 3 times. So guys, I'm not gonna spend more time on other days that I've skipped, but I believe there's a lot to learn, because when you are looking at them like this, you get to see the ones that are not giving you a pattern. And if you don't backtest in real time, guys, you're gonna see the smallest patterns and you're gonna be chasing the smallest thing. Why? Because you haven't mastered the patterns. You haven't mastered the patience. You don't have what it takes to sit on your screen or sit on your hands, because you are always trying to backtest the whole month in one day. You are trying to backtest the whole week in one day. Backtest 1 day per day. Okay, in real time. Some days you're gonna get it early. Some days you're gonna get it. This is almost 59. They are going to the 3rd hour. This is the beginning now of another hour. You see, but you had to sit. If you're backtesting in real time, you are gonna see these things. You are gonna get used to sitting. Okay, but the time, the pattern, the evidence candle, that's all you need. Okay, and the reason I didn't say take it here, it's because you need the same criteria every day. This is a big candle. You see, they went up before coming down, and this is the big candle. This is the last leg. Boom, because this was still inside the pattern. This is the last leg. Boom, this is when they break out with a big candle. Guys, you need to see these things repeatedly. Here they came down, but you don't have a pattern. Okay, so you're gonna feel like, oh, I missed this. You didn't miss it because they didn't give you a pattern. Okay, so this is your elephant. Always wait for it. Guys, I appreciate you. Hit the subscription button, and guys, go back to your charts and backtest. I have free backtesting tools in my description. Okay, just go backtest. Don't do many days in one day. Okay, don't try to just do everything quick. Okay, yes, you need the experience, but part of sitting 3 hours in front of your screen and getting nothing, part of sitting 2 hours on your screen and getting the trade in the 2nd hour, that's part of the experience you need. Okay, because if you are not used to that, you're gonna struggle. You're gonna try to find trades as quick as possible, and you're gonna take decisions based on emotions. Okay, they are gonna try to trigger emotions so that you take a trade. Don't do that. Thank you guys, I really appreciate you. Have a blessed day.